Hey there.
Hello.
Happy Friday. It's Keeping the Real in Real Estate with Ruth Sheehan.
And Danielle Tully.
And today we're talking about WTF is FHA.
WTH.
I'm sorry, WTH. This is a family show. Is FHA and VHA and VA. So Danielle's going to run through some specifics. Know that they change. This is today. It's not all lenders. These products are not appropriate for every buyer, but we just want everybody to get an overview of what they are and what they aren't. How you should feel if you are a seller and you get an offer with one of these instruments as the lending mortgage. And just in general, how they differ from conventional loans and whether there's something to be concerned about or not.
Correct.
So Danielle, what's FHA?
FHA. It is a type of loan that is backed by the Federal Housing Authority. So that's the FHA. Mm-hmm. So basically, it's still through a general lender. So sometimes it could be a bank or a mortgage broker, or something that is very well could be a conventional loan as well. But the idea of the FHA is that it is federally backed because it is considered riskier. So the traditional lender wouldn't necessarily, we've talked in the past about how it used to be 20%. And in some cases, they're, conventional loans are allowing 10% down or 5% down. So this is taking it a step further for those that don't even have the 5%, and it's allowing up to 3.5% down. So that would be a loan for a total of 96.5% of the value of the house or the purchase price of the house. It also, in comparison to traditional loans or conventional loans, allows for a little less credit score.
And sometimes it's only the credit score. So I personally had a buyer who had some credit issues due to a divorce that were outside of any normal activity in this person's financial life. They had good income, good savings, a great down payment, but because of this credit ding that was following them around, were required to go FHA. So, and also we should say your lender is the person who's going to tell you what's appropriate for you. So they're going to tell you, we can do a conventional loan, or you are going to fit the FHA requirements, and that's the direction we're going to go in. So this isn't really something you say, which one should I do?
Right. Well, I mean, yes, it can be. So it could be an either or, it could be an and situation. So yes, so you could definitely do an FHA loan at 10% or at 5% or 20% if it just comes down to the credit score being what's keeping you up. So there are also situations that you can have even a lower credit score than the 580. And again, 580 is movable. We saw a gigantic hike in the month, 5 weeks following the pandemic, where everybody started tightening up real fast on credit scores. It didn't last very long, but it is, again.
And again, just when we were talking about what happened during the crash and why you shouldn't wish for it, very tight on credit scores coming out of the crash.
Correct. So with even a lower score than approximately 580, there are instances where the FHA will back you up with a higher down payment. It also is a program that allows down payment assistance. Now, it could be from your savings, right? But if you haven't saved enough, there are occasionally state, local, and sometimes federal grant programs out there to help with down payment or closing cost, as well as gifts. So that's a big thing. And it has to be a gift. The idea is that they want your debt to income ratio to still be in a level that is acceptable, and they don't want you getting a second loan. So it has to be a gift. So it could be from a relative or a friend or whatever, but there's a note involved. There's a letter. There's a confirmation that in the end you are not required to pay
Doesn't
it
need
back.
to be paid back. Yeah.
Correct. And then for the savings, and by savings, I mean in the bank, there has to be a paper trail. So if you are in an industry where you get paid a lot, cash on this, not on the side, but you get paid cash, you have extra cash, or you've saved cash up.
You're about to get a bonus.
Correct. You want to make sure that it is deposited. It kind of cures a little bit. There is a paper trail because, again, they're worried about an off the books type of transaction where the money is only temporary. It is a gift or is a loan. They want to be able to track that. So you want to, if you're thinking about buying and you have some ideas, just make sure everything gets put into some sort of banking institution that you can prove.
There's also government requirements to make sure that the money was legally gotten. So
Correct.
if you suddenly have $10,000 that you put into your bank account, the government wants to know why and where they came from. So we've had some issues sometimes when someone has just gotten married and deposited all of their wedding gift money into their bank account. Sometimes people think, oh, I'll borrow some money from my mom and I'll pay off a credit card instead of, then it won't be that they're, seeing this lump of sum. That don't think they don't see that. Don't think that suddenly that credit card debt coming off is doesn't matter. You have to have these conversations with your lender.
Correct.
And discuss how you're going to do everything. Don't think that just because you're borrowing the money from your brother that everybody's going to be okay with it. Check with your lender first on all of that.
Sure. And then there's some other kind of sub loans that they do. You might have heard of a 203K, which is a renovation loan, reverse mortgage loans. So these are all fine, the FHA type of loans. They're all under that kind of umbrella there. We talked last week about PMI. So if you don't know what we're talking about, check out last week's, but that is one of the negatives about the 3.5% down is that you do have the private mortgage insurance, which does increase your monthly payments and hangs over your head for a while longer than a traditional 20% down conventional.
And the FHA insurance is different now from.
Oh, is it?
Yeah, there's additional FHA insurance, and then you used to be able to pay that off in a lump sum, but I believe now it's for the life of the loan. So
okay,
you can refinance out of it, but you can't just have it go away.
Correct.
So,
okay. Sorry. So there is like a penalty. There is a penalty, but an additional insurance type of thing, a little higher. But
I believe at least it used to be an amount that was added to the mortgage. So you would pay, $200,000 for a house and your mortgage would show $205,000.
Correct. And again, lenders, like Truth in Lending Act. There is when you get further into the process, you do get an entire breakout of where all of your monies are going. So it's the purchase of the house, all of the title insurance, all of that gets in there. So don't worry, that will be something that your lender can help you figure out from the very beginning.
Fully disclosed, but just know that it's not, there are some extra fees involved because it's extra risk. We talk about that a lot. Whenever the lender is taking more risk, it's going to cost you more.
Okay. And then also for around here, generally it's not that cumbersome, but there is also a max amount that you can purchase a house for and use FHA financing.
And a max amount of the loan.
Correct.
So you can, if you were one of those people who was using FHA because of a credit issue, not because of a funding issue, you could add $50,000 in cash on top of it and raise your borrowing power, but FHA will only lend up to a certain amount in the mortgage.
Correct. And that varies too. And then we have, so that's kind of a quick overview about FHA lending. It tends to be a lot, again, it's a government program trying to get the masses available to, purchase a home if that's their goal.
And then let's try quickly, because we're a little far in time-wise to get to VA, but quickly, a couple of things to know is that if you are purchasing a condo, the condo has to be approved by FHA in order to be funded by it. There is something called spot approval, where if the association is not approved, you can apply for approval of one condo. But in this market where things are going so quickly, you are never going to have time to get that done. So you want to make sure that that it qualifies. If a property has been owned by the seller for less than 90 days, an FHA buyer cannot purchase that property. So if a property is bought by a flipper and they put it, they paint and put in new countertops and they put it back on the market 30 days later, you cannot write a contract on it with an FHA loan until the 91st day. Anything else in buying that are restricted? I think that's it.
I think that seems about right.
Then the inspection for an FHA appraisal. FHA appraisers have special training, and they do an FHA inspection. This is completely separate from your homeowner's inspection at the time that they do the appraisal. They tend to check for certain things, among them handrails, anywhere there's stairs, and it has to be a graspable handrail, peeling paint, smoke and CO detectors. Those are the biggies that
peeling paint, interior and exterior.
Yes, anywhere that there's
in like a detached
even a fence.
Garage, and it could be caught on a painted deck or things like that. So
yeah,
internal and external.
And the house has to be livable. So you can't buy a house that doesn't have flooring, for instance, or appliances. Maybe some appliances and not others.
Yeah, I
believe
it's onion oven. I think is because I think it has to do with the gas and making sure the gas is fine. But I think
you have to have a functioning kitchen too. So I think you have to be able to.
Correct.
And then the only exception to that is that construction loan, rehab loan that Danielle talked about. That's the only way to buy a fixer-upper with an FHA loan. And then when that appraisal comes in, it sticks with the property for 6 months. So in areas where an FHA buyer is their most likely buyer, that appraisal is a bit of a concern. Although if you're going to get FHA, you're going to get an FHA appraisal. So when you get that good morning, Mike, when you get that appraisal, it cannot be changed for the next 6 months for any FHA buyer.
And that also has had some flux too. So there has been times that
it's been a shorter amount of time. Yeah.
So just that can change on us too.
But that's one of the things that sometimes listing agents and their sellers are concerned about. The possibility of required repairs is something that they're sometimes concerned about.
But again, those are usually the repairs, making sure that there's a stairwell or a railing or CO2 detectors and fire, smoke detectors and things like that.
They're generally not huge fixes or expensive.
Exactly.
They do need to be done before the lender will lend. And so what happens is in multiple offer situations, if someone's got 5 conventional offers and 1 FHA, that FHA backed loan is just going to go to the bottom of the pile because it's a little bit more difficult. So you need to find ways to make that more appealing to that seller if you're in the situation.
Correct. And kind of in the same vein is VA loans. VA loans are very helpful, right? They're veteran assistance program to help veterans purchase. And if you are eligible, it is really a nice program. We personally used it, quite honestly, when we bought this house. Yes, first house. I don't know. We used it. Yeah, actually, it was this house. And so again, no PMI, no private mortgage insurance, no
100%
for
financing.
being 100% financing. So that means there's no down payment. You still have closing costs. They are lower. They are not as high, but still there. But it's nice. You have fewer closing costs, as I was saying. There's no penalty for an early payoff. So if you start making more money and want to start paying it off a little faster, that's perfectly fine. There's no penalty for that. One of the drawbacks, though, for it is, as we were talking about, they do have a bad rap for the type of appraisal inspection that goes on, where again they just want to be sure that one of their own is not getting into something that is not good for them.
Unsafe house, or one that they couldn't afford to do the repairs on.
Correct. They don't want the house falling apart around them. So one of the things that the caveats that you really only see on VA loans is that there's a termite inspection. Now, in Illinois, it seems a little odd that the termite inspection must be done and that it must be paid for by the seller. So it's not a buyer sell. I'm sorry.
Can't be
paid by the buyers. It can be paid by the sellers and sometimes the lenders or the
seller's mom.
Yeah, right. The agent, whomever.
It can't be paid by the buyer.
Right. And here it's a little lesser. There's definitely, again, this is a nationwide program. So there are areas where having that type of inspection is necessary regardless of what type of
lender. And we do sometimes see them, by the way. It's rarer than it is in other places, but just so people don't think that it's completely impossible to get termites here. You can.
Oh, absolutely. It absolutely is. I'm just saying, is often.
Obviously, but it's just standard with all VA. And if you get a VA offer and they didn't ask for a termite inspection, just know that it's required. You're not going to get out of it just because
it
didn't happen.
And there is a part on our contract where it definitely says initial here for seller paid for. So if it is a VA loan, it should have that.
And it's not that expensive. It's certainly, again, not something that should preclude someone from taking this kind of a loan. And so
it has to be owner occupied. I'm not sure if I got that.
Yes.
No investments.
Same with FHA. You can buy a unit, but you need to occupy one of them.
Correct.
So we do have some issues. Again, neither of these loans is particularly competitive when up against a good offer with a conventional loan. So you need to know that going in. We have our own thoughts about, there's a meme circulating in some of the realtor groups right now that says this was my down payment on my VA loan, and pictures a combat situation. This is something that one of the few things that we as a country give to the people who served us. So you might want to take a second look at it when you get one and say, maybe if all things are close, this wouldn't be the worst thing in the world to accept this veteran's offer. But
I think both get a bad rap, and I think that it's not as bad as people talk about it.
Not at all. Not in my experience.
No, not at all.
And I think sometimes it's a case of an agent being a little overly zealous on trying to protect clients from something that's not going to hurt them.
Correct. So, but we are going to, in the next couple of weeks, talk about, we've
done dozens of both.
Yes.
They work out fine. They're fine. It's not something to be freaked out about.
Absolutely. And again, knowing ahead of time and being prepared ahead of time, going, hey, as realtors ourselves, I know I walk into a house and if there's a missing smoke detector, no matter, before we list it, I go, we've got to get that up.
Right.
This is just
handrail. You need a handrail here.
Yeah. absolutely. This might be a thing. Okay. So, being prepared just before listing is probably, for any type of offer is the best to go, anyway, as a seller. Even in a seller's market, putting a couple, little bit of a little bit of work in there just to make sure it's on the up and up for every type of loan is the best. Because if there's peeling paint, and they didn't realize it, even a conventional loan can go, come on.
There's a common phrase I hear from sellers or would-be sellers or people thinking about selling, and they say, well, it only takes one. Let me tell you, what happens when you have only one buyer? What do you think happens to your price when you have only one buyer? Right. You want to appeal to as many possible buyers as you can. That's how you get the most money for your house. That means going on the market. That means showings. That means as much exposure as possible. So obviously hire an agent who's capable of doing that. Mm-hmm. But this idea that selling your house in secret, like adds some cachet and somehow that makes the experience better is silly. Do you want more money?
Right.
Expose it to the market. And by the way, a sign in front of your house or a Facebook post to your friends or an ad in your paper local newsletter is not exposure to the market. The thousands of agents in our MLS is exposure to the market. That's where the market is.
Absolutely.
So sorry, stepping off my soapbox.
So in the coming weeks, we are going, one of our Facebook Live is going to be talking more in depth of the pros and the cons of all types of selling and affording, what this market is and how to put your best foot forward. So it will be a bit more on FHA and VA then.
Absolutely.
All right. Until next week.
See ya. We're putting the real in real estate.
Bye-bye.
And agents, catch us on YouTube in a couple minutes.